Hello and welcome to this special edition of Switzer Investing TV. I'm Paul Rickard filling in for an absent Peter Switzer. Peter will be back next week, but today my very special guest is Mike Gable. Mike, of course, is the CEO of Fairmont Equities. Mike's a regular on our program, but I really wanted to get him in today to go through a number of things. What does he think about our market? And of course, the US is a lead market. And then really go through some both hot and cold stocks, things that have been in favour and a couple that are out of favour to see what the opportunity is. Stocks such as Linus and Telex Pharmaceuticals, but the old favourites like CSL as well and Amcor. But finally, a bit of a surprise for him from a stock that, to me, a lot of our clients are going to be happy in, but it came as a bit of a surprise to me. He thinks it's about to break upwards. So stay tuned as Mike Gable joins me live in the studio with his charts.
Mike, thanks for joining us.
Thank
I thought we'd start off with the lead market because our market largely follows. That's the US S&P 500. For our viewers, this is a candle graph. We've got the candle in red and black that you can see. That's a daily movement. Red meaning a down day, black meaning an up day. We've got the 50-day moving average, and then the other line below it in dots is the 200-day moving average. This is a graph over the last 12 months for the S&P 500. So, Mike, what's it telling us?
We're still in that uptrend. So despite the big movement down that we saw just over a week ago, all it's really done for the US market is bring it back towards that 50-day. And we can see that since all the turmoil of April, the market's been happy to trend higher. It's been above the 50-day moving average the whole time. And sometimes it gets ahead of itself, but it catches up to the 50-day. And at the moment, it's holding on to that. So far, so good. Look, if it does breach the 50-day moving average, that will just bring in a bit more short-term weakness. But generally, as long as it's staying above the 200-day, I don't think as a long-term investor, you'd have too much to worry about. So far, so good.
It looked like a very steep 50-day average in terms of the gradient about one. Is that right in terms of historically, in terms of the market?
It's not too bad. I mean, volatility has been very low, except for a brief couple of days here. And that's a good thing. So, yeah, look, so far, so good. I mean, as I said, if it does breach the 50-day moving average, then maybe we see a bit of a dip. Maybe the market wants to pull back 5%, several percent, but we don't have that trigger yet. But no major warning signs. So,
And fundamentally, are you bullish on the US?
yeah, I still think it can head higher. I mean, US growth is holding up. Inflation's still fairly benign. We've got rate cuts on the way. So look, at the moment, it's looking fine. It does look like the market can push higher.
Well, that's the lead market we tend to follow. So let's look at the Australian ASX 200. Same story with the ASX 200.
Pretty much. We've got an uptrend. What's interesting is, our market does take sort of bigger pauses along the way. So
there's April. There we are currently about 9,000 or thereabouts. Yeah.
Yep.
We got down to what, 7,200 in April.
Yeah,
just patched it.
The fantastic buying opportunity. But we can even see here during June and July, we could see that after a big run up, the market consolidated sideways or heading higher. And again, to me, this whole period here from about late August up until sort of early October, to me, looks like another consolidation. And now the market's breaking to new highs. So again, it looks like a nice sustainable uptrend.
So that people like myself have been a little bit cautious on the market. Do you think we've been too cautious?
Oh, look, I think if there's caution out there, that's great. We're not in a euphoric state. Look, there's always things to be mindful of. But I think in our market, we do have some sectors that are clearly on fire at the moment. We have a lot of gold stocks, we have a lot of resource stocks, and they're really helping drive the market. And when I look at the way the major banks are trading now, it does look like they're starting to break higher. So
yeah, CBO today back about 170. So today look like it wants to go up again, doesn't it?
It does, and I know it'll drive a lot of people crazy. And yes, sometimes I don't understand it either, but the way they're trading, it looks like they're going to head higher again.
Okay, let's go to some of the hot stocks. Let's start with rare earths. Where else would you go? Linus, of course, a miner, but processors in Malaysia. That's the Linus chart. We all thought of $14, $15 it was overbought. Where are we going now with Linus? It's up again today, right? It's
Yeah.
Yep.
Yeah. So look, I like it. I'm holding it for clients. Yeah, it was a long time coming, the whole rare earths thing. I mean, I've been talking about supply issues with commodities for a while now, but they're starting to become front and center of of what everyone's talking about. So, rare earths is obviously one of the bigger issues out there in terms of Western supply not being where it should be. I've spoken about uranium. We'll talk about that in a minute. And plenty of other commodities I think will start to um, come to the fore in terms of investors and the market realizing that there is a supply and demand imbalance there.
And so this doesn't the shape of that, how quickly it's gone, doesn't worry you.
As long as it consolidates along the way. So what I thought I'd do is I'd bring a daily chart just showing what it's done since the start of the year and what I'm using as my trailing stops. I've spoken about trailing stops before, and we could see that. So this blue line here is a 20-day moving average.
Right.
So I think this is a nice, I guess, a nice filter for, how long do we stick in the trade for. So I'm using this. We could see that on Friday, it did briefly dip under it, but it bounced back above that 20-day moving average. So we're still in the trade, and I'm just going to hold on to it as long as it's above that 20-day. If it breaches it, I'll sell it, but then I'll be looking for an opportunity to get back in, to be honest.
So it's up 5% today, maybe a little bit more since we did this chart. Where would you be putting a stop at the moment on Linus? So stop, by the way, if you're not familiar, of course, is if you want to trade a stock and you are really trading it as opposed to for investing, is where you get out when, so you limit your losses basically.
Yeah. So at least for this moving average, it graphically shows you where I'm going to get out. So at this point, when I was holding it, this is where I would get out. But now that it's moved, my stop has moved all the way up here, and we could see that it's a bit under $19. So yeah, as long as it continues up, this line will follow it, and who knows how high it can go. So yeah,
It doesn't sort of remind you a bit of the lithium boom of about 18 months ago. It doesn't. You don't see any similarities with that. Everyone was talking about lithium boom. There's going to be so much demand from electric vehicles and everyone else.
So the difference here is the demand for rare earths is as it's always been. We know the demand's there. We're not speculating that there'll be this huge increase in demand. So we already have demand for rare earths. And what also killed that lithium boom was all the supply that came on. And we know that supply of rare earths is an issue. It's not as though all these mines will suddenly spring up in WA and start producing rare earths very soon. So it is an issue. Look, there'll be big swings along the way because it is at the moment driven by a lot of speculation, and there is a lot of hot money coming in and out, traders as well. But look, I think that it's something that can run for at least the next 12 months. There'll be big dips along the way, but I think if you could trade it, you could do well.
Okay, one for the speculators. Okay, let's move on to uranium, which has also been a bit hot and cold. This is Paladin, PDN.
Yep.
What's the chart on Paladin telling us?
Yeah, it looks really good. This is a weekly chart, so going back to
2020.
So this is another exposure we have. We've got the uranium ETF as opposed to the direct.
That's URMN.
Yep. URNM. Uranium mine.
URNM. Yeah.
So that again, we've got an issue where there's clearly not enough supply for the demand out there. The market hasn't really caught onto it yet, but there's no reason why this can't do what Linus did, which is triple in price so far this year. So it's on its way. So what we've seen along the way is initial spikes where there has been a bit of, I guess, awareness or excitement about what's happening with the uranium price, and then these big consolidations along the way. There was another spike, especially in the spot price, and I won't bore everyone with how the spot price is different to the term price, but the e-liquid spot price did get ahead of itself. And then as it's come back, Paladin's come back, and they've had a few production issues along the way. So to me, it looks like this consolidation is over, just as that was over and led to a rally. And I think it's at the early stages of a rally. I quite like the way it's trading. They've raised some capital recently.
So, two questions. One is there's some big short positions in the uranium.
Yep.
They're all professionals. Does that worry you at all?
No, I mean, that's exciting because they don't have to buy back their shares at some point. So, look, I think the short positions for for a period of time, those professionals were correct in that businesses like Paladin, who move from development to production, often encounter issues, and they have encountered issues, and the share price has naturally fallen because their production numbers did get wound back as a result. But from here, if you've got a uranium price that's heading from $80 to potentially at least sort of 50% to 100% higher in the next 12 months, you won't be able to stop the share price. And they'll need to cover because it could easily get back up there.
Okay. All right. So you're not worried about the shorts. Then Paladin versus Boss Energy. Do you have a strong preference of Paladin?
You'd have to stick with this one because Boss Energy has an issue with one of their mines where they're getting consultants in to determine, the state of that resource. So until we have that information, that one's riskier. But
And DBLO today, managing director's sudden exit, share price down 20%. Too small to sort of get in that category?
well, that's actually quite interesting because yes, the CEO's left and you might want to put two and two together and figure out there could be a problem. But if there isn't, it could just be naturally the CEO moving on. Being a development company, you don't have these sort of production issues at this very point in time. So, look, as you're sort of alluding to, very risky sector in terms of when you got mines trying to get into production. So that's why we've just bought the Uranium Miners ETF, which covers a number of miners globally, and you end up with a much smoother path.
Okay, let's go around on some of the risky stocks. Let's look at a stock that's been labelled more for income. And of course, it's Packager and Amcor, one of my favourite stocks, but it's been a bit unloved of late, down to about $12.50. What is the chart telling you, and how do you match that with your fundamental view?
Yeah, look, it still has that downtrend to it. I mean, interestingly, it seemed to have peaked when the market bottomed, and then when the market went up, this thing's lost quite a bit of value. So
This is over 2020 to 2025, I should point out, Jack.
yeah. So it's quite a long term chart, but it has even over the 5 years, it's severely lagged the market, and fortunately, no dividend can cover that. But yeah, look, I mean, it's one that you'd keep an eye on if you like.
So you're not a buyer?
No, I mean, when you've got a downtrend like this, I'd be steering clear of it. But if you like the business, you keep it on the watch list, wait for this downtrend to hopefully end. If you start to see it turn around with your higher highs and higher lows, maybe it starts to move above some of those moving averages like we saw with the S&P. If it's at least above the 200-day, I don't have the 200-day moving average on this chart, but I'm guessing it's up here somewhere. Ideally you'd wait for all that to happen, and then at least it's on the way. Or you could.
Okay. All right. So we're hearing from Mike Gable, too early for Amcor, right? Yeah. I think that's what you're saying. All right. Okay. Next one, of course, is a stock that's been a lot of speculation, and it's been like a yo-yo. That's Telix Pharmaceuticals. So TLX, what is this telling you? And again, very heavily shorted out there, short sellers.
Yeah, still trending lower. So, we've looked at this one before. There used to be a very nice uptrend, and it was one that we were involved with until the uptrend broke. What I'm still seeing is every time it rallies, the sellers step up to the plate and dump the shares. We could see most recently here in September, it got close to this high, got sold down. At the moment, it's getting close to that high now. So it'd be interesting to see what happens, I guess, over the next few weeks. If it could at least get above this September peak, and that would be, I guess, the first good sign that the sellers are starting to dry up. So, and that means it might be getting ready for an uptrend. But at the moment, it is still early days, unfortunately. I mean, look, one other positive is on this dip here, it was able to stay above that low. So you could say,
I mean, it's about $14 roughly. Yep.
Yeah. So look, it did manage to get close to that low before bouncing. We just need to see it surpass that high. So there's a few I guess a couple of other things I'd want to sort of tick off before I'd be keen on telling.
This is the number one question we get asked in our Boom Doom Zoom show for our Switzer support subscribers on the Thursday. A lot of interest. Great trading stock, I think, for others. But my wariness on Telex is like any biopharma stock, you're largely in the hands of the FDA, which always makes things a bit challenging. And two, as I pointed out, there's been a lot of short selling in the stock, and it looks like the sort of movement you're talking about is the shorts re-establishing. So when they're prepared to give up, I guess is maybe the time to get in. But we usually see whether it can form a bit of a bottom down here. Yeah.
Yeah, and again, if they have the right announcements and the shorts cover, then it could be some good upside, but we're just not seeing that yet.
Okay. All right. Now, done Telex Pharmaceuticals. CSL, you mentioned earlier, one of my favorite stocks, but a bit disappointing. Good every week. Last week was up over $10. Has CSL bottomed?
I think so. Yeah, I think so. So, look, there's a couple of momentum indicators on my longer term chart, which I don't have here, which I think indicate that it's likely to have bottomed. And since that September bottom, I like the way it's trading. Short answer is I think there's a very good chance it has bottomed. Once it gets into the 230 region, I think there'll be a bit of resistance.
Yeah.
You'll notice with all these little dips here, there are clearly a lot of buyers of these dips that are underwater. And once it gets up here, they may wish to exit their positions if, a few weak hands. But, look, I really like it. I think CSL's a buy on the dip situation.
So those who got in sort of $198, $199 looking to take a bit of a profit target about 230. That's where you'd be sort of targeting.
Yeah, if you're a short-term trader, but I'd be happy. I think it'll eventually surpass that. So
and your fundamental view, that's consistent with your technical view?
Yeah, look, I mean, well, I suppose technically it's still in a long-term downtrend. I'm looking at sort of more of a short-term turnaround here, which I think will eventuate into a longer term uptrend, given that, look, I still like the business. I think it's really cheap for where it is at the moment. I think that'll start to come to the fore.
Right. Okay. Well, that's CSL. That's good news, we hope. Finally, we haven't got a chart of this one. We've got to ask you about gold.
Yep.
But it's had an enormous rally, moving back a little bit over the weekend.
Yep.
Still long gold?
Yeah, still long. So so the way we've gone long gold is through a gold miners ETF. So another ETF, but on gold miners, because when the gold price goes up 50%, usually a mining company will be up 100%.
That's because they're more leveraged. They have basically almost fixed costs and have leverage to the price increase.
Yeah, so we're holding GDX, which is the VanEck Gold Miners ETF. There's about 60-something miners in there. Again,
they're global miners?
Global miners. Again, it just eliminates some of that individual company risk, because miners can be pretty risky, as we discussed. Look,
there's other problems like production problems.
Exactly.
And, pesky boards of shareholders, employees, or accidents directly, right?
Getting nailed in Africa or something like that. So, no, look, I'm still holding. I've got my trailing stop running under my GDX, but look, gold had a bad night on Friday. It did so a couple of Fridays ago and kept heading higher. So, yes, there's pictures of people lining up to buy gold, and yes, it's gone up quite a bit in a short period of time. But if I think about the reasons why it's going up, they haven't gone away. We're just talking short-term dips. So for anybody who's not in the gold space, I'd be happy to enter on a dip.
All right. Well, I like I like the ETFs. Probably want to be hedged. That's me, QAU. But I also like Northern Star. But the gold miners, the ETF is probably a safer way to pay a basket of gold mining companies. And finally, Mike, your pick, which is Macquarie Group, had a good day on Friday. What's your view on Macquarie?
Yeah, I really like the way it's trading. So I thought I'd avoid bringing another resource stock in because I've talked those to death. But we're holding Macquarie. It has underperformed the market during this period in the past few months. But
hasn't around a lot this last 12 months either, if you look at where it started the year to where it is today. But
that's
up a fraction compared to the market. It's up a lot more. But
so to me, it looks like it's going to start to play a bit of catch up and get a move on. So if we just talk about charts, what's very interesting here is when you see a stock rally and fall just short of an old high, it's then interesting to see, okay, well, what does it want to do here? Is it going to hit a lot of Are we going to get a lot of selling? Is it going to pull back?
The high is about 235 roughly.
Yeah, around about 230s. So instead of pulling back in a deep manner, it's essentially traded sideways. So what's happening in this period here is a rally from
June, basically June to
basically June till today. So what's happening is every time Macquarie tries to rally, you get a bit of selling, but every time it gets around sort of 210, 215, there's enough buying stepping in to bring it back up. So you've got this sort of tug of war just under the old highs. So I think what's happening is you often get a lot of sellers here thinking, look, I want to exit my Macquarie. I'd be happy with about 230. It's close to its old high. But eventually that selling will dry up. It's not guaranteed. But usually when I see this pattern, usually it's the selling that dries up. And then so if you start seeing Macquarie push through 230, it means that all those that wanted to sell have sold, and you'll see it just breeze through to a new high quite easily. So I guess what I'm trying to say is if you're in Macquarie, yes, it's been disappointing for a period of time compared to the broader market, compared to the major four banks, but I think it's about to make a pretty nice move. So stick with it.
All right, we'll mark that one down. A lot of our clients are pretty long Macquarie, so they'll be pleased to hear that. Mike Gable from Fairmont Equities, the Managing Director of Fairmont Equities. Thanks so much for sharing those insights with us at Switzer. Thanks, Mike. Really interesting to know that you're bullish on both the ASX and the S&P 500. Really pleased to hear about Macquarie and, of course, CSL and all the other stocks. So some really great insights. Let's hope that Mike continues to be as right as he has been in the past. He's one of the best guys when it comes to charts, but more than that, he combines charts with fundamental analysis. Of course, he's the Managing Director of Fairmont Equities. Now, next week, Peter will be back in the shoes. Don't forget, you can read about all our ideas and learnings and join us in Boom, Doom and Zoom, but that's only for subscribers of the Switzer Report. Go to switzer.com.au. I'm Paul Rickard. We'll see you next week.